Transfer pricing disclosure requirements for taxable persons. Taxable persons conducting transactions or arrangements with related parties and connected persons may be subject to specific transfer pricing disclosure requirements. These requirements are designed to ensure that the Federal Tax Authority, FTA, can carry out a comprehensive and reasonable risk assessment of the transfer pricing practices employed by the taxable person. The primary goal of this process is to confirm that the transactions conducted with related parties and connected persons are in accordance with the arm's length principle, the standard for determining fair pricing in transactions between entities with a close relationship. The role of transfer pricing disclosure. In order to maintain transparency and fairness in the corporate tax system, tax authorities require that taxable persons disclose key details about their transactions with related entities. The transfer pricing disclosure requirements are an essential part of this regulatory framework, providing the FTA with the necessary information to assess whether these transactions align with the principles of fair competition and market pricing, especially when these transactions involve related parties, entities that are closely connected through ownership, control, or kinship, and connected persons, individuals or entities with a significant relationship to the taxable person. By ensuring compliance with these disclosure requirements, the FTA can effectively evaluate whether the pricing of these transactions is in line with what would have been agreed upon between independent entities in similar circumstances. This helps prevent tax avoidance strategies, where companies might otherwise manipulate prices to shift profits to jurisdictions with lower tax rates, depriving governments of tax revenue. Disclosure requirements for taxable persons. 1. Information disclosure alongside tax return. Taxable persons who engage in transactions or arrangements with related parties and connected persons are required to provide detailed information about these transactions when submitting their tax return. This information must outline the methods used to determine transfer prices for these related party transactions and demonstrate that these prices are consistent with market prices that would have been agreed upon in transactions between unrelated entities. 2. Purpose of maintaining transfer pricing information. The primary purpose of maintaining and disclosing transfer pricing related information is to explain and support how the taxable person has determined the prices of transactions with related parties and connected persons. Specifically, this includes providing evidence of how the transfer prices align with the arm's length principle. The taxable person must demonstrate that the pricing applied in these transactions is comparable to prices that independent parties would have agreed upon under similar circumstances. This could involve presenting comparative data, financial analysis, or other relevant documentation that shows the transfer prices are consistent with the practices of the broader market and industry standards. 3. FTA's authority to request information. The FTA has the authority to request detailed information from taxable persons regarding the pricing of transactions with related parties and connected persons. These requests may be made at any time and are typically part of an ongoing audit or risk assessment process aimed at ensuring compliance with transfer pricing rules and regulations. The taxable person must comply with any such request made by the FTA. Failure to provide the requested information can lead to penalties or further scrutiny of the taxpayer's financial activities. 4. Time frame for submission. Once the FTA issues a request for transfer pricing related information, the taxable person is generally required to submit the requested data within 30 days of the request being made. If additional time is needed, the FTA may extend the deadline for submission. This time frame allows for a prompt response and provides the tax authority with timely access to information needed to assess the arm's length nature of the transactions. 5. Supporting documentation for arm's length transactions. In addition to the basic information about the pricing of transactions, the taxable person may also be required to provide supporting documentation that demonstrates the arm's length nature of the transactions or arrangements. This could include, but is not limited to, detailed explanations of the methods used to determine the pricing, example, cost-plus method, comparable uncontrolled price method. Comparative market data to show that the transfer prices are in line with industry standards. Contracts, invoices, or other relevant financial records that provide further context and justification for the transfer prices applied. Compliance with transfer pricing disclosure. It is important for taxable persons to comply with these transfer pricing disclosure requirements in order to avoid potential issues with the FTA. Failing to submit accurate and complete information, or not responding to information requests within the required timeframe, can result in significant penalties or adjustments to the taxable income. Therefore, it is crucial for businesses to maintain proper documentation and be prepared for possible scrutiny from tax authorities.